Price analysis for gold and Forex pair Great Britain pound US dollar. Gold price rises as U.S. Treasury bond yields depress greenback amid debt ceiling concerns. The gold price is nearing $1,996 as it extends its recovery from a 5-week-old ascending support line during early Tuesday trade. As markets await the important U.S. GDP and Federal Reserve outcomes, the precious metal benefits from lower U.S. Treasury bond yields and a weaker U.S. dollar. Concerns about the U.S. debt ceiling, which is slated to expire in June, are also dragging on U.S. bond coupons and the currency. Gold prices are rising due to concerns that the U.S. debt limit may be reached in June. The political intrigue leading up to this event keeps traders alert and causes them to be risk-averse, increasing market for 1-month U.S. Treasury bond yields. In keeping with this, the U.S. Federal Reserve may undertake a final 0.25% rate hike in the month of May before indicating a policy shift. As a result, the yield spread between 1-month and 3-month U.S. Treasury bonds has widened to its widest since 2001. As a result, the U.S. dollar index, DXY, is trading near 101.30, down for the 4th day in a row. As gold prices break over a 1-week-old declining resistance line, they are approaching the 50-bar simple moving average, SMA, at about $2,003, while the moving average convergence and divergence, MACD, indicator is displaying positive signals. The stable relative strength index, RSI, line at 14 also encourages buyers of gold. With these variables in mind, the precious metal is primed for further advances, with a potential monthly high of over $2,049 in sight. Gold sellers would need confirmation from the 5-week-old ascending support line to reclaim control, which was around $1,980 at the time of writing. If the gold price falls below this level, bears may focus on the 200-bar SMA at $1,966 and the late March low under $1,935. It is vital to note that if the gold price falls below $1,935, it may soon fall towards the 61.8% Fibonacci retracement of its March-April uptrend, which is near the $1,900 mark. Let's analyze the pair Great Britain pound US dollar. Great Britain pound US dollar surpasses key 1.25 resistance as US dollar index weakens. The Great Britain pound US dollar pair has surpassed the critical 1.25 resistance level during the Asian trading session. The cable experienced a remarkable upward movement due to the weakening US dollar index, DXY. The USD index reached a new weekly low of 101.20, and further declines are expected as investors predict the Federal Reserve will end its quantitative tightening program following a 25 basis point interest rate hike in May. S&P 500 futures indicate minor losses in the Asian session after a moderately positive Monday, reflecting a decrease in investor risk appetite. The 500 U.S. stock basket is anticipated to experience significant volatility this week as major tech companies report their first quarter results for 2023. Meta Platforms, Google, and Microsoft will reveal their quarterly performance and revenue guidance, keeping investors on edge. The faltering USD index has also influenced U.S. Treasury yields. The 10-year U.S. Treasury bond yield has dropped to around 3.48%. The USD index is expected to remain active this week, as preliminary gross domestic product, GDP, data is slated for release on Thursday. The annualized first quarter GDP is projected to shrink to 2% compared to the previous release of 2.6%. A decrease in GDP figures could heighten concerns about a slowdown in the U.S. economy, potentially prompting the Fed to maintain a stable stance on interest rate guidance. On the UK front, the likelihood of a more aggressive Bank of England monetary policy is increasing as the UK grapples with persistent double-digit inflation, labour shortages, and soaring food inflation. UK food inflation has already reached a 45-year high of 19.1% with no signs of easing. Bank of England Governor Andrew Bailey may consider raising rates by an additional 25 basis points to 4.5%. Thank you for watching this analytics. Our company specializes in providing signals for trading in all financial markets such as Forex, stock market, and crypto. You can find the whole article at the link in the description. You can also like this video and subscribe to the channel.